I'm Jaden Sterling, and welcome to my podcast, Intuitive Investing. As an entrepreneur and someone who has taught people how to invest for 34 years, I have a good sense of what it takes to thrive as an investor. Each week on my show, I provide tools and tips, as well as interview world-class investors on their strategies. When your gut and research match, your ability to live a life of financial freedom is easy. Welcome to Intuitive Investing, and let's get started. Hey everyone, welcome back to another podcast, the Intuitive Investing Show, and I have a special guest for you today, Andrea Jenson. Andrea, how are you?
I am great. Thank you so much for having me on today.
I'm happy to have you on. So we've heard your bio, but tell us from your words, like how did you get started? How did you get into what you're currently doing now, this fractional CFO? I'm so interested.
Yeah, well, oh gosh, I've been doing this for a while now, and in my background, my past, I've worked for venture capital companies, I've worked for private equity companies, and I've learned a lot of how, from that side of business, how things are done. And coupled with, I'm a fourth generation entrepreneur myself, so I've seen and grown up in a lot of entrepreneurial conversations and the environment. And I really recognized that there was this big disconnect between how small to medium-sized businesses run their finances and how the big corporations run their finances and the tools and strategies that they use and employ. And I really saw that there was a need in the market for all of these business owners who are doing just amazing things and have amazing services and products, and they're fulfilling needs that otherwise would go unmet, but they just don't have the business or the finance background. And so that's where our company was born. We said they can't afford to hire a full-time CFO, but they could do the fractional model and still get the benefit and the expert guidance and expertise that offers them. And then it will help them grow and strengthen their financial education. And it's just an all-around win-win for everybody.
That's so interesting. And what I really like about what you do too, is you take a holistic approach. In fact, tell us about the 5-step program that you've created.
Yeah, absolutely. So I think a lot of times finance professionals look at things through a narrow lens, and they're looking at, how much money are you making and how are you spending it and what's the bottom line? But there's so much more to that story, right? For entrepreneurs, for small business owners, your business is your biggest asset, your biggest wealth creation asset. And a lot of times that business owners aren't looking at it from that capacity. They're looking at it as, how much did I make in sales? How much am I paying my team? What's left over? And they're, living off of what's left over. And that's really doing an injustice to them as individuals who need to build and create wealth to sustain, their family and put kids through college, and maybe they have aging parents they're trying to take care of. And there's just so many things that are pulling on them, right, from a financial perspective. And they're putting so much time and energy and effort into growing this business and sustaining it, that there's the piece that's missing there is, number one, it has to be profitable for you to be, doing all of this effort and putting all of this energy and love into this business. And they're not looking at it from, how do I know if my business model is profitable? So that's one component. The other thing is they're not looking at what's coming down the pipeline. So that's where the holistic view comes in, is what's the sales activity that's happening? How many leads do you need to generate in your business? What's your customer acquisition cost? What's your customer lifetime value? How does all of that fit into the business model to be profitable, so that you have money left over, right? That's the most important piece. You have profit that you can go then and invest in other assets that are going to generate wealth for you. So that could be, investing into stocks or investing into real estate or whatever that might look like for your personal portfolio. The whole purpose of having a business is to serve your clients, to, employ teams so they, the benefit their families taken care of, but then you have money to create wealth and take that compounding approach to all that hard work and effort that you're putting into the business.
Yeah, I'm totally with you. And are there any particular niches that you specialize in, or tell me about that?
Sure. So we actually don't have any specific niches that we focus on. We are looking at more of the business owner that we're partnering with, and who are they and what are they trying to achieve, and how do they operate their business, and how do they make decisions, and how do they take care of their team and their clients and things like that. So the industry is not so important. It's more of who we're going to partner with to help them grow their business, because we can come in and I always like to joke that we sprinkle our pixie dust on all the businesses that we work with, because there's no business that I can't turn profitable. There's nothing out there. The business models are, you're either retail, product based, or you're service based. But beyond that, the financial components are the same. So it doesn't matter what industry that you're in. It really boils down to, is there synergy in the way that we partner with our clients and what they're trying to do, and we can get on board with them. And our clients, we have an 86% retention rate with our clients. And we owe that to being particular on, we know our stuff and it works really well. So who are the right people that we're all set up for success that we're going to work with?
That was really my next question. Like, obviously you'd want someone coachable, someone open to hearing what you have to say, ego aside, right? Like do you kind of come in like a SWAT team and go through everything and say, okay, this is the plan, this is what we're doing? Or tell me about that process.
Yeah, we actually, similar to that, but we start with, what are you trying to achieve with your business? What are your goals? What is your 1 year, your 3 year, and your 5 year goal? And where are you at now? So we take a look at, and in our 5-step process, that's step number 1. And it's really digging deep into understanding where they're at now, what challenges they're facing, and digging into, well, why is that happening? There's only so many answers that could be the why. And so when we identify where, it could be their pricing is incorrect. It could be that they're not spending enough in marketing with the right marketing team that's going to bring them the leads that they need. It might be, all of those components. Maybe they're top heavy in their admin, labor versus their delivery, team that's delivering the service or making the products or whatever it may be. So we really dial in, we take everything apart in the business, all the expenses, and we look at them and we understand where they're at now. And then we say, okay, now we know where we need to make some adjustments. And we look at what are their 1 year, 3 year, and 5 year goals. And we make decisions from those places versus where we're at right now, because that's what's going to help get them to hitting those revenue goals and the profit goals.
So how many of your folks do you feel like they've kind of stumbled into this? Maybe they started out as entrepreneurs and they started getting traction and they're doing, 7 figures. Obviously they have, a great product and service. It's taking off. They've got people in their tribe. When let me ask, is there a time that someone says, hey, like they put their head up and go, oh my God, I need a CFO. Like, what does that look like? What's the bridge to kind of this one person entrepreneurial platform to now building a team of professionals around them?
Mm-hmm. Yeah, I love that question. And a lot of times what we tell clients that we do is we professionalize their finance pillar in their business. So when they get to that, 800,000 or they're at the $1 million mark, you're probably experiencing some pain points of, I'm selling, but there's no money left over. or I'm selling and I'm doing great on the front end, but my team is just stressed and maxed out, and I need more people, but I don't know how much I can afford to pay, and I don't know who I need. And so you're experiencing a lot of those, I need financing. How do I get a line of credit? Do I take out a loan? I don't have a banking relationship established, those types of things. So you've got your head down, you're just grinding to get to that point. When you get to that point, that's kind of where you look up and go, gosh, I'm really doing a lot of work, but I don't have much money left over to show for it. And a lot of times what that is it's a pricing issue, right? Because in the beginning, you don't really know, you haven't taken the time or had the skill set on your team to understand how much it costs you to deliver what it is that you're selling. And so you kind of guess at the price, right? This is what people say they'll pay for me to do X, Y, Z. So I'm just going to run with it. And that's really where they get into that cycle of when they have to do that analysis, they realize, oh, wow, that's why there's no money left over in my business to, when we look at profit, we say there's 4 things that profit should facilitate in the business. Number 1 is to pay income taxes. Number 2, to service any existing debt. Number 3 is to reinvest back into the growth. So you're strategically deploying those profit money. And then the 4th is owner's compensation. So it's depending on the type of entity you are, whether you're taking payroll and dividends or distributions or, some mix thereof. Those are all of the things that profit should be working in your business to do. And so if there's no profit left over, you're going to have a hard time reinvesting or, taking that compensation to go then and invest in other things that are going to create personal wealth. So that's really where, as you're making that transition as a business owner, you're feeling the pinch. And then you should be definitely bringing in a fractional CFO. You don't need a full-time one at that point.
Okay, so in that order, like compensation for the CEO last after all those other things are taken care of?
Well, so that's where we get to play with the numbers. And that really is like, what are you trying to achieve with this business? So is it a lifestyle business? Is this something you're growing to ultimately sell or be acquired? Is this, whatever that goal is that you have in mind, that's how we do those allocations and we prioritize them. So companies who are like, oh, I want to grow to 10 million, 20 million, 100 million. Okay, they need a higher reinvestment percentage back in. Or are they taking out debt to accomplish that? Are they changing their cap table and bringing in investors? Like there's so much that goes into that analysis, but it all boils back to what are you trying to achieve with this entity that is your business, and what are your 1, 3, and 5-year financial goals?
Yeah, thanks for clarifying that. And so what is a fractional CFO? I mean, it makes sense that it's obviously someone who's on a part-time basis, but tell me more. How does your company fit into getting a good quality fractional CFO for another business?
Yeah. So there's a lot of things that a fractional CFO will do for your business. And there's some financial anchors, I like to call them, like fundamentals you can't do without. And that's a budget, a forecast, a pricing analysis, a cash flow forecast, looking at the cash flow ins and outs with all of the different components that are not just what you see on your income statement, right? How do we incorporate those 4 things that we talked about, what the profit does in a view for the business owner to look at and use as a tool to make spending decisions, growth decisions, things like that. A management dashboard. So in the management dashboard, we're looking at key performance indicators. So as we're taking apart the business model, what we're doing is we're identifying what are the key performance indicators of success. And we're tracking those monthly as well. So this management dashboard is a beast of information. It's got so much good stuff in there. We're looking at total revenue, month, in a monthly basis versus a year to date. We're looking at how far away are we from our sales goal? How many months are left in, and how does that goal need to shift for the remaining months of that year? We're looking at what's your monthly burn rate? How much cash do you have in the bank? How many months does that equate to that you have a runway of money? We're looking at debt. How is that debt changing on a monthly basis? We're looking at accounts payable, accounts receivable, owner's equity. We're looking at all of these different components in one snapshot. That's a management dashboard. And it's super powerful when you have updated current information and you can see the trends. That's the other piece that's really important to look at. What's the seasonality? How are we planning for it? Things like that. So those are some of your must-have information on a monthly basis. Then we also, as far as some of the deliverables that we do, pointing back to our 5-step process, our holistic model is we're looking at, so first we understand where the business is at. We build the profit roadmap for the 1, 3, 5-year goals. Then we move into our pricing for profits, make sure that we understand every single dollar that is spent to deliver on a sale. And that should equate to between 40 and 50% of your total revenue. So that's the first step, is we make sure we're in alignment there. And then once we check that box, we move on to marketing. So what is the marketing and profit connection? So in that component, we're really diving deep into what are, how many units of each of the things that you sell do you need to sell to hit your revenue goal? And then we back into what is your sales cycle? What is your sales conversion rate? How many leads do you need on a monthly basis, to make sure that we see what's coming in down the pipeline of revenue activity. And then we're able to make sure that we're going to hit those revenue goals, because we're building so much else in that forecast behind those revenue numbers. We want to make sure that we've got visibility into, are there any kinks in our sales pipeline that we need to address to make sure that everything flows smoothly. And then KPIs. So the key performance indicators, that's really where we're looking at operational KPIs, financial KPIs, marketing, sales KPIs, all of those things, and then giving you one place that you can go, all right, if I look at it, my dashboard, and these are good, these are good, these are good. Oh, this one's not so good. This is good. This is good. Over the next 30 days, you know exactly where you need to put your focus on to get that one KPI back in line. And then things continue to move along. And next month, same thing, monitor and adjust, monitor and adjust. That's how the big businesses operate. They're looking at things in a very, all the way through. How is the cash performing in the business? How is it coming in? What happens while it's in the business, and how is it going back out and being reinvested or taken as, distributions or things like that for the owners. So when we look at that process, that's really where, when we get to that fifth module of our process, it's you're expanding your wealth and you're expanding your reach. So you really understand, like, okay, I know it's like baking a cake, the recipe. I know that if I put in these ingredients, this is the result I'm going to get. And, just like you check the timer, you check or even better, like I like to use the gauges in your car. There's a lot of gauges in there and we all know what they all mean, but a lot of business owners don't have those gauges and they don't know what they mean. And so that's the fractional CFO comes in. That's the financial education component of, it's a done for you service, but we're also teaching you what you need to know as a business owner to effectively run your business from that kind of higher level versus being in the weeds and having that gut feeling of, I think everything's going okay, but I'm not quite sure. This gives you that peace of mind because you can see it all and know, how everything is operating and what efficiencies you have.
That's one of the best explanations I've ever heard of when to hire fractional CFO or any fractional business for your business. Thank you for that. I agree. It's like, you got to know your metrics. You got to know your numbers. Very important. And that's how we felt when we created, I'll share with you our software. Andrea, you're going to love this. We created software to help people with their investment dollars because like your service, sometimes it's so difficult to figure out, when do I hire a fractional CFO? When do I expand aspects of my business? And when do I invest in the equity markets? When do I, start buying stocks? And how do I go through that process? So 6 years ago, it feels like a much longer time than that though, but 6 years ago, we set out to create software. And essentially it's to help people invest their money. Even if you're a novice investor, you can easily find winning stocks. And here's an example, Andrea. We created a magic stock selector. So if you come here and think, okay, I'm ready to invest some money, I don't know where to get started, what do I do? We've curated this data into some of our best picks that our software follows in terms of the equity markets. And so as I click that, I come up with Broad Ridge Financial Services. It's 5 stars. That's our coveted highest ranking we give a company in our system. And we show its average risk. But look at this chart, kind of interesting. It's kind of moved sideways for the year. But what I like about it is the stock price is above all of the averages. So it essentially means it has support, like Andrea is saying with the CFO, supporting the rise and growth of a company. That's what this software is showing with this particular company. And she talked about KPIs. Well, we have metrics that we show. So we follow the fundamental metrics, which is insider activity. We like to see what the insiders are doing with their stock. Are they buying it? Are they selling? Insiders are almost perfect buyers of their stock. Why? Because they're on the inside, right? They know what's going on. They know what's going on in the industry and the business. If they're buying, that's a really good sign. So we look at also the financial metrics. We're looking at revenue growth, current ratio, how they deploy the cash on their balance sheet. Super important. That's a metric Andrea talked about as well. And the money flow index, is money flowing into the stock or out of it? The importance of that is whether its stock is overbought or oversold. So all of these indicators turn out a score, and it's all happening behind the scenes. So someone can come here and go, wow, I've got money to invest. I want to grow the wealth that I'm building in my company. What do I do? This is where you go. sterlingstockpicker.com. Click that magic stock selector and up will pop a stock that is low to average risk, 5 stars, best in the industry as well. And they can bring a lot of confidence as an investor. Do you think this would be helpful for you, Andrea, something like this?
Absolutely. I love that you're compiling some of the data that is telling you the health of the company. Because a lot of, I feel that if you've got money to invest, you don't have the time to sit and go through and sort through all of that information, nor do you have the skill set to do that for a lot of people who, have money to invest. And I think also it's really important to have, a diversified portfolio, right? And definitely stocks should be one of those components of it. So what a great tool to have to help people, cut through all the busy work and just jump right in and know what to do and where to go.
That's it. I mean, years ago when I was a broker with Merrill Lynch back in the 90s, it's so long ago, Andrea, I noticed something really interesting. The clients who brought in their portfolios with just individual stocks, like John Deere, DE is the ticker symbol, that stock popping up here. I noticed that the ones who kept their individual stocks performed way better than the clients who sold their stocks, bought packaged products like mutual funds and unit investment trusts and all that gobbledygook. And their performance was astronomical over the years as we looked at comparing the two. And that's when I realized the light bulb went on, like, okay, individual companies is the real way to create wealth. I did in the 90s. I bought one stock, Andrea, just one Traveler stock. That was the parent company of Smith Barney, who I ended up my career with. And phenomenal. That stock tripled in price over that time period, and just kept doubling down on it, kept buying it every single month. And it gave me the financial freedom to be an entrepreneur, like your 4th generation. So I am so curious. As you're talking, I'm always tuning into my intuition and my gut. And my gut is telling me, ask you what it's like to be fourth generation entrepreneur and what, because that's unique. I don't hear that often, right? Because we were so drilled into us in the 50s where, the husband went out, got a job, worked in a company. So there wasn't this, like, you're going back in time here. I'm so curious. Tell me, what was the biggest thing that you noticed? Like, or were there any threads that came through the generations that came from being an entrepreneur? Any like personality traits, or I'm just curious to hear that from you.
Yeah, what a great question. I love that. So I come from the restaurant industry. So um, my dad bought into the family business, and we had several different locations, and he opened up his own location. So that's my firsthand experience growing up in the entrepreneurial space. And what I learned from watching and being a part of it, because I started washing dishes there when I was like 13, right? That was every summer you went to work with dad, and so number one, long hours in a restaurant, low margins. So it's a labor of love, right? You have to really love what you're doing. And what I found was that, watching my dad, his love was his customers. And they always came first. And he just really loved, he would just chit chat with them. And he had the regulars that would come in, and they were like family to us, at some point, even his suppliers, right? The bread man, the milkman, the pie guy, the dishwasher repairman, like they worked for 20 years together they had these relationships, and so they really were like part of the family. But it's really funny in my journey, right? Because I went to college to play soccer. I had no idea what I was going to do. I just went, got a scholarship, loved playing soccer, wanted to do that. I started taking accounting classes because I was taking all of my general classes. I took accounting 1 and accounting 2 and aced them. And I was like, oh, cool. My GPA is going up. I'm going to take more accounting classes. So I kept taking accounting classes. And finally, one day, my professor pulled me aside and he said, this doesn't come naturally to most people, accounting, right? Usually people struggle with accounting. And I was like, really? I love it. It's just the way that my brain works. And so that's when I realized, like, oh, okay, there's something here. And I really kept taking accounting classes and different business courses. And that's where I was like, okay, I like this. I went to work for a venture capital firm out of college. And that's really where I fell in love with business models and how things work in a business, and how you could take one business, and in my head, I can pull apart your entire business model and move things around. And that's my unique superpower, right? And now I'm surrounded by a team of people that do just that for all of our clients. But you couple that with what I learned from my dad in the entrepreneurial space and the customer experience. And that's really what we've built our company on. And so every decision that we make in our business is, what is the customer experience and the customer journey going to feel like and be received as when we're taking these very complex terms and concepts and putting them into everyday life, right? Because as a business owner, 85+% of your net worth is tied up in your business. Majority, the ones that we've seen, that's the majority, the average. And that's a really big deal, because if you make a bad decision in your business, it's going to directly impact your personal life and your family and your livelihood and things like that. So we want to make sure that they understand what we're doing and why we're doing it. And so that's the customer service, that's the customer experience, that we bring to that, which has been our unique differentiator in the market. Because we're that trusted partner that, our clients call us and they say, can I buy this? Can I invest in this? Can I do this? Should I do that? We're like, hold on, let me go run the numbers. And, so we built that type of relationship where we're not just number crunchers, and they don't, a lot of times it breaks my heart when they're like, oh, I don't want to call my CPA, or I don't want to call my whoever's financial team that they've put around them because they make me feel stupid, or I just don't understand what they're saying. So I just nod and smile and I hang up the phone and I go, I still don't know what to do. So it's like that's what we've set out to change in the financial service. And the fractional CFO is a relatively new concept. I still hear, when I talk to business owners and I explain what they do, they just kind of go, oh my gosh, I didn't know that even existed. So there's a lot still of the educational component around the availability of this type of service for business owners, which I think is really cool that we can be setting our, we have this level of standards and delivery and all of those things that, give us that 86% retention rate and renewal rate, because our clients are like, I'd be stupid to leave. I love you guys. And I feel so safe and comfortable because, I can tell you everything and there's no judgment. There's no making me feel dumb for doing something or, not understanding something like that. So that's really where, the entrepreneurial seeing it, but also I will say this too, the restaurant business is probably one of the absolute hardest business models that exist because of the low margin, labor costs, food costs, all the things. Like you have to run that like this. And a lot of those business owners get into it because they love serving people and watching people's reactions and enjoyment of their food. They're not in it for the business aspect of it. And so I was firsthand to the challenges that presents also. And so I was really able to take what I learned big business and apply it. And I think that's where the heart really comes in with the business owners that we serve, because I saw firsthand how intimate it is having a business and the finances and things like that.
Very cool. Thanks for that. Illuminating that. I was curious. It's like, yeah, I started a business that has fridge benefits, right? Like you won't go hungry.
Yeah, that's true.
So I'm curious, let's say a company hires one of your fractional CFOs, is that CFO potentially a fractional CFO with 8 other companies, or like, are they balancing a lot? Like how does that process work?
Yeah. So they do serve other clients, not just one client in particular. They will only have a certain number based on the level that business needs, hours requirements. And they are, definitely we want the business owner to feel like they're just down the hall, and it's funny because we're a remote company. And it feels like most other companies that are remote gravitate towards us because we dovetail well into their business model. And so we do have a lot of those clients, but whether you have a brick and mortar store or you're an online business as well, we want you to feel like you can just pick up the phone. We text with our clients all the time. We're constantly emailing. And so we're very much, a part of their executive team, even though, we're in the fractional capacity.
Awesome. So you'll have, I imagine, some fractional CFOs who will show up on investor relation calls, capital raises,
Absolutely.
things of that nature. Yeah. So high level. And, another thing that came up as you were talking, I'm curious, like we're post-COVID and business has changed so much. What are you seeing today? Like what's a typical, I mean, I know it's hard to generalize because business is so different depending on the industry, but what are businesses and people, currently having a challenge with now, and how do you all address that?
Yeah, I think that what COVID did was present an opportunity for businesses to realize the importance of financial stability, having cash reserves, having, not cutting it down to the wire on, how they're running their business. And the ones that were too close to, the edge there, they did get propped up with some of the government loans and programs that they had during COVID and shortly after. But those funds have run out as well, right? So a lot of those businesses that If you don't have a profitable business model, you can only hide or you can only outsell it for so long before you have to face the reality of what it is. And the ones that were given that opportunity and the extra cash to make that switch and go, all right, I have a little bit of wiggle room now because I've got this cash that's going to hold us over while we fix our model and the profitability of the business that we're doing. They're doing really well right now. But the ones who just, for lack of a better term, just buried their head in the sand or continued to do so and didn't look at it and go, okay, that was a wake-up call. I'm going to fix it and, be better for it. They've run out of money of COVID and now they're unfortunately having to close their doors. So what we're seeing now is that the little bit of the shakeout has happened, and the businesses that are left standing are better off and more solid financially because they either made those adjustments, or what we saw, which was really cool, and we helped all of our clients do this, is during COVID, if their business model was not something they could operate during COVID due to the shutdown or any restrictions that they had, we had to quickly introduce a second revenue stream and get that up and going. And we were able to do that. So then once everything opened back up and business as usual, now they have two really profitable revenue streams. And most of our clients have doubled their business through COVID because of having us on their team to be able to run that analysis and run the what ifs. What if we did this? What if we did that? What if, we merged with this company or we did this joint venture, or, whatever it may be. That's the beauty of investing into a team that's going to help you grow. It's not an expense. It's, I just want all the business owners to understand that when you're investing into a financial brain on your business, that is not an expense. We're not out buying purses and shoes and cars and fun stuff. This is something that is going to give you a return on your investment time and time and time again. And, it's takes that weight off of you as the business owner, because you've got that person right next to you that you can bounce those ideas off of, that's feeding you the data so that you have that peace of mind and comfort that, hey, things are working like the way we planned. I'm good, things are okay. And so that's kind of my summary of what I see in businesses now after all the shakeout has happened.
Yeah, I've always said, as difficult as recessions are, it's also one of those weighing mechanisms that, the not so capable business owners aren't able to survive, but the ones that who fought through it, who survived it, come out way better on the other side. And so I'm curious, like, as a business owner is listening to this, is there a revenue threshold, or do you look at profitability? Like, when is the time when a business owner says, okay, I need to invest in a fractional CFO?
Yeah, I think it's either pretty close to the seven figures or right at the seven figures is when you should be investing in a fractional CFO, because they're going to come in and fine tune things to get you to that next level. And you're going to get to that next level profitably. You might be getting to the seven figures, but your profit's not, 20% where it should be. You're much, much lower because you're just kind of throwing spaghetti at the wall to keep selling. And that's not a way to run a business in a, long run, because you're just going to wear yourself out as the business owner, and you're going to, run out of steam eventually. And so it's kind of like, all right, you've made it to this milestone. Now let's slow down to speed up again, right? And get all of these fundamental, the foundational pieces in place before you start to grow again. And then when you do, it's a much smoother trajectory. And you're not, a fast growing business eats up cash like no other, right? And if you're not strategic on how you're spending that cash, we look at every dollar in revenue that comes in a business equals 100%. And you've got the same 100% as every other business out there. You've got to allocate it appropriately, so every dollar has a purpose in your business. And when you look at it from that capacity or from that viewpoint, then you're proactive versus reactive. And that's what really gives you the control. And, I keep going back to peace of mind because it really is. It's like, how many of the business owners listening have stayed up 1 or 2 nights of their business career going, am I going to cover payroll, or I need to pay this bill and I don't know where the money's going to come from? Or, we all go through that as business owners from one point or another in our journey. And, when you have these tools and this team member as part of your team, that takes away all of that, because you're the proactive versus the reactive, keeps you up at night worrying and wondering and stressing.
Yeah. Yeah. Thanks for that super clear example. And so let's say you're clipping along at $500,000 a year, good margins, actually profitable. Is that a good time or are you still really like, okay, no, when you've got the 8 figures in mind, is there an interim, someone else you'd recommend a company hiring before fractional CFO? Like, what's your high level expertise on that?
Well, my personal opinion is that the very first hire every single business owner should make is a bookkeeper, whether it's 5 hours a week, 10 hours a week, 20, whatever it needs to be. That's the very first position they should hire. And the reason for that is because as your business grows, all along the way, it's accumulating data. And that data is like gold. I want every business owner to think about that. You're creating data, whether you like it or not. But the beauty of that data is if it's organized right out the gate and you've got a bookkeeper that's keeping up monthly reconciliations, your financial statements, match your tax returns, all of these things, as you get to that $500,000 or the $1 million or, above, when you bring in somebody like a CFO, that's the first thing they go and, all right, what data does this business have? What can I can look at somebody's P&L and their general ledger detail, and I can tell you a whole story, like Mad Libs. I can tell you the story of that business, where they chose to spend their money, how they chose to, all the things, because the data is there, and the data is just that. It's just data, right? Data doesn't lie. It's not judgmental. It's not a report card of what an amazing person you are or you're not, it's just data. And when you have clean data from the get-go, you're going to be that much further along than your competitors that aren't doing that, from, just so many things. So that's the very first hire you should make, is a bookkeeper who knows their stuff and is going to get you set up with the proper systems and reporting and chart of accounts that's going to flow through to your financial statements and that type of thing. And then if you're at the $500,000 mark, and I guess 2 ways you could go. One, if this is just a lifestyle business for you and you're cool cruising along at $500,000, it's paying all the bills, you got the nice toys that you want to have, and the kids are set, and all that stuff, that's great. Not every business has to scale, right? But if you are looking to scale the business and you want to get, if you want fast track to that $1 million or beyond, bring in a fractional CFO, because they're going to get you there in no time. If you, are at the $500,000 and you're like, yeah, I just don't see where I can pull the money to invest in it. We've had clients that have put it on a credit card, because we guarantee you're going to get that money back plus, at least 4 times that investment, because we know that we won't take on a client if we can't do that for them. So, that's something I've seen our clients do before, because they know, like, hey, I'm building this to do XYZ and I need the team to help me get there. So, there's no right or wrong answer, and every business owner is has their own level of comfort and what they're trying to do with their business. But every business is an asset. And as long as you're super clear on what you want that asset to do, what the ROI on that asset is, what, all of that stuff, then, those are kind of the decisions you would make on whether is it the right time to bring in, the higher level team.
Awesome. Awesome. Love it. That is so great. I'm grateful. Thank you, Andrea, for coming on and sharing your expertise. Hey, still playing soccer these days, or?
Still playing soccer. Now I'm trying to keep up with all the 20-year-olds. I'm like, we just keep getting older and they just keep getting younger. What's going on? But yes.
Exactly. That's That's the big thing as we keep going. So then you utilize your skills and your talent. Maybe we're not as fast as
That's where this comes in.
That's right. That's where the mindset comes in. Hey, thanks so much for joining the Intuitive Investing Show. And anything you want to leave our audience with?
Yeah, I just, I can't say it enough and reiterate it enough that your business is an asset to create personal wealth so that you can go and invest in these other types of other assets that are out there that are going to compound all that time, energy, hard work that you put into your business to create the money the first time. Go put it to work. Go do the passive investments that aren't going to take the labor of love and time and all the effort that you're doing in the front end, and watch what happens. With your service is a great example of that. Watch what happens when you see the compounding returns on that. And passive income is a beautiful type of income. So more business owners need to really understand active and passive and be moving it from one bucket to the other bucket. And utilizing services like yours.
Well, I appreciate you saying that. And I look forward to having you back on because I want to double click on that passive income approach because I'm with you. That's why we all show up at the end of the day, is to create a stream to build wealth so that it ends up paying dividends down the road.
Absolutely.
You're awesome. Thanks, Andrea.
Thank you.
Thanks for listening to this week's episode of Intuitive Investing. If you enjoyed this week's episode, make sure to subscribe and leave a review. For other helpful resources, please visit sterlingstockpicker.com. That's STERLING stockpicker.com to access free intuitive investing training.